Welcome, everyone, to this discussion of non-coded income in the UK.
Right.
You know, taxes can feel like a bit of a maze sometimes.
Absolutely.
Like there are these hidden rules and tricks that HMRC doesn't really tell you about.
Yeah, and it can feel like you're playing the game you don't really know the rules to.
Exactly. You know, my tax accountant, the UK's leading accounting firm, they thought that too. And that's why they've brought us together today to break down this whole non-coded income situation.
Yeah, we want to make sure that UK taxpayers have all the information they need so they don't have any nasty surprises later on.
So let's jump right in. What exactly is non-coded income? It sounds a bit mysterious.
Yeah, it can definitely sound a bit intimidating, can't it? But it's actually not that complicated.
Okay.
Basically, it's any taxable income that HMRC doesn't include in your pay tax code.
Okay, so PAYE is that pay-as-you-earn system most employed people are on.
Exactly. Your employer deducts income tax straight from your salary every month.
Makes things nice and simple.
Yeah, you'd think so, but not all income falls under that payee umbrella.
Ah, so there's more to it than that.
Exactly. If you earn money outside your regular job, think self-employment, rental income, investments, or selling assets.
Right, so it's not just your 9 to 5.
Exactly. That income might not be part of your payee code, and that's where non-coded income comes in.
So like those unexpected bills that completely mess up your budget.
Yeah, it's a great way to put it. You think you've got everything under control, then suddenly you get hit with a tax bill you weren't expecting.
Yeah, this does sound fun.
And there are a few reasons why HMRC does this. Sometimes the income is unpredictable, like if you do some freelance work on the side, or maybe you're in a higher tax bracket already.
Oh, I see.
But the important thing to remember is that you're responsible for reporting that non-coded income and paying the right tax on it.
Okay, starting to see why my tax accountant wanted us to discuss this.
It's important to be aware of this stuff, you know?
So what exactly counts as non-coded income? Can you give us some examples?
Of course. So let's imagine someone called Jane. She's a full-time accountant.
Okay.
But she also does some financial consulting on the weekends.
A bit of a side hustle.
Exactly. Her day job is covered by PAYE, but those earnings from consulting...
That's non-coded income.
Yeah, because it's separate from her main employment, and it might change from month to month.
So even though she has a regular job, she needs to keep track of that extra income and sort out the taxes for it separately.
Absolutely. It's important to keep everything organized.
Okay, that makes sense. What other examples are there?
Well, let's say we have David who decided to invest in property. He's got a buy-to-let property.
Nice.
So he gets that rental income every month, but that rental income...
Also non-coded.
That's right. It's not taxed at source, so David has to report it himself and pay tax separately.
Passive income isn't always so passive when it comes to taxes, is it?
Definitely not. You've got to stay on top of it.
Right. What about investments? Are those ever non-coded?
They can be. So let's imagine Sophia. She's been investing and getting some dividends from her investments.
Okay.
But the UK has a dividend allowance. If Sophia's dividends go over that allowance, which is currently £1,000, that extra bit becomes non-coded income.
Oh, so it's not just the type of income, but also the amount that matters.
Exactly. Even small investments can end up being non-coded.
That's really important to remember. Okay, so we've got side hustles, property, investments, anything else?
Oh, yeah. Plenty more. Let's say someone named Mark decides to sell his second home.
Okay.
And he makes a profit from that sale. HMRC wants part of that too. That profit is subject to capital gains tax, and that's always non-coded.
You don't get away from HMRC even when you're celebrating selling a property.
Definitely not. And finally, let's not forget about people earning income from abroad. So let's say we have Emma, who's got a rental property in Spain.
Sounds lovely.
It is, but even though it's abroad, the income she gets from it is still non-coded in the UK.
Wow. So even if you're earning money while relaxing on a beach, HMRC is still keeping an eye on you.
You know, it's incredible how many different situations can lead to non-coded income.
It really is. So we've established that non-coded income can pop up in all kinds of ways. But the big question is, how does HMRC actually collect tax on this income if it's not automatically taken through PAYE?
Yeah, that's a good question. Yeah, so HMRC has a few ways of doing that. The most common one is something called self-assessment.
Self-assessment. Okay, so is that like some sort of tax exam or something?
Not exactly. It's more like filing your own tax report. Basically, if you earn more than £1,000 in untaxed income from those non-coded sources we were talking about,
right,
then you usually need to register for self-assessment and file a tax return each year.
So you're basically telling HMRC, hey, look, this is all the extra money I made, and this is how much tax I think I should pay.
Yeah, that's pretty much it. You work out the tax yourself based on your income and the current tax rates, and then you pay that amount directly to HMRC.
And I'm guessing HMRC has all sorts of online tools and things to help with that.
Oh yeah, they have tons of guidance on their website to make it as easy as possible.
That's good to hear, but what happens if you mess up your self-assessment or forget to file it on time?
That's where things can get a bit hairy. HMRC is really strict about deadlines, and if you miss them, you could end up paying penalties and interest charges.
Ouch, so it's important to stay organized.
Definitely, good record keeping is essential.
Okay, so it's more than just shoving receipts in a shoebox.
Yeah, for sure. Luckily, these days we have much better options, cloud-based accounting software like QuickBooks or Free Agent.
Right, those can be lifesavers, especially if you've got a lot of different income streams.
Exactly. And of course, my tax accountant offers personalized support and advice to make sure everything is done properly.
Right, because who wants to spend all their free time doing taxes?
Exactly. You've got better things to do with your time.
So even with great record keeping, how do you actually know when you need to register for self-assessment? Is there like a certain amount you have to earn?
Yeah, you remember that 1,000-pound figure we talked about earlier? That's basically the magic number. If your non-coded income goes over that, then you've got to register for self-assessment.
Got it.
And the deadline for that is 5 October, following the tax year you earn the income.
Okay, 1,000 pounds in 5 October. Got to keep those in mind. So let's say you've registered for self-assessment, you've been using your accounting software, and you're ready to file your tax return.
Oh, okay.
Any tips to make sure it all goes smoothly?
Well, first things first, double check you're using the right forms, and you send them in by the deadline, which is 31 January.
I'm guessing online filing is the best way to go.
It is, yeah. It's much quicker and easier, plus you get confirmation straight away.
Right, can't beat that. But what about actually doing the calculations? That's the bit that scares me.
Don't worry, you don't need to be a math genius. HMRC has lots of resources on their website to help you out with those calculations.
That's good to know.
And of course, if you're still not sure, my tax accountant is always there to help. They have a whole team of experts who can guide you through it all.
Okay, so that takes some of the pressure off. So filing your tax return and paying what you owe by 31 January, that's the main thing, right?
It is, but there's one more thing to remember. Payments on account.
Payments on account, what are those?
Think of them like installments for your tax bill. If your tax bill for the previous year was more than 1,000 pounds, then you'll need to make 2 advance payments towards your next tax bill.
Okay.
One by 31 January and another by 31 July.
So instead of one massive bill at the end of the year, you spread it out a bit.
Yeah, exactly. It can make things a lot easier, especially if you have a big tax bill to pay.
That makes sense, but we did talk about those penalties earlier. It sounds like staying on top of these deadlines and payments is pretty crucial to avoid any trouble with HMRC.
It is, yeah. HMRC is getting much better at tracking down undeclared income, so it's really not worth taking any risks.
Okay, definitely a good incentive to stay organized and on top of everything.
But even with all these rules, it doesn't have to be overwhelming. There are things you can do to simplify things and reduce the stress.
Well, that sounds like good news. What kind of things are we talking about?
It is. There are proactive steps you can take, to kind of simplify the whole process and minimize your stress.
That sounds good to me. So what are some of these magical tips?
Well, first and foremost, remember, knowledge is power. You really want to stay informed about any changes to tax laws and regulations.
Okay.
HMRC updates its guidance all the time, so check their website regularly. And you might even want to subscribe to their email updates or follow reputable tax blogs.
Right. So you can stay up to date with all the latest developments.
Yeah, exactly. Ignorance isn't really an excuse in the eyes of HMRC.
Definitely not. Okay, so what else can we do?
Well, one thing that can save you a lot of hassle is making sure you're claiming all the tax-free allowances and deductions that you're entitled to.
Oh yeah, those are like discounts on your tax bill, aren't they?
Exactly. There are different allowances depending on your income source.
So it's worth doing a bit of research to figure out which ones apply to you.
Absolutely. It's like a treasure hunt for tax savings.
I like that, tax treasure hunt. So where do we find these hidden gems?
The HMRC website has tons of information about the different allowances and deductions.
Yeah.
For example, everyone gets a personal allowance, regardless of where their income comes from. And there are specific allowances for things like trading income, property income, dividends, all sorts.
So if you're self-employed or a landlord, what kind of things should you be keeping track of?
Well, make sure you keep detailed records of all your business expenses.
Okay.
Because you can deduct those from your income before calculating your tax, which can really reduce your tax bill.
So it's like getting a discount based on how much it costs you to run your business.
Precisely. And for those with investment income, it's worth considering investing through ISAs or pensions.
Okay.
Those are tax-efficient ways to invest that can help you shield your earnings from tax.
So many clever ways to make tax time a bit less painful.
There are, but it's important to remember that the tax system can be quite complex. And what works for one person might not work for another. That's why it's always a good idea to get personalized advice from a qualified accountant.
Right, because what you think is a brilliant tax saving strategy could actually backfire if you're not careful.
Exactly, and that's where my tax accountant really comes in. Their team of experienced accountants can give you tailored guidance to help you deal with non-coded income.
Okay.
And make sure you're compliant with all of HMRC's regulations while also maximizing your tax saving.
It sounds like having my tax accountant on your side is like having a personal tax superhero.
I like that. Yeah, they're definitely there to help you fight for your financial well-being.
Well, I think we've covered a lot of ground today. We've demystified non-coded income, explored how HMRC collects tax on it, and even uncovered some clever ways to save on tax.
And we've highlighted how my tax accountant can play a crucial role in helping you navigate all of this.
Absolutely. So as we wrap up this discussion brought to you by my tax accountant, I want to leave our listeners with one final thought. We've talked about being proactive and informed when it comes to non-coded income, but taking that first step can be tough sometimes.
It can be, but remember, even small actions can make a big difference.
Exactly. So to our listeners out there, what's one small action you can take this week to get a handle on your non-coded income?
Right. Is it downloading some accounting software, checking your dividend allowance, maybe booking a consultation with my tax accountant?
Whatever it is, take that first step. You won't regret it.
You won't.
And on that note, a big thank you to my tax accountant for sponsoring this discussion and helping UK taxpayers understand their finances.
It's been a pleasure sharing our knowledge with everyone.
Until next time, stay informed, stay empowered, and stay in control of your money.